Ladies and gentlemen, we are about to begin. Michael, please go ahead.
Well, thank you, and hello, everyone. My name is Michael Velker, and welcome to today's webcast, which is titled Active Risk Management, a Smarter Way for Home Insurance Carriers to Retain Customers and Grow More Profitably. Today's event is brought to you by Property Casualty 360 and sponsored by Lexus Nexus. As I mentioned, I will be moderator for this event, but before we get to today's presentation, we'll just go through a few simple housekeeping items. First of all, the event is completely interactive, and it incorporates many of today's social media tools. So you can tweet or directly post information to your Facebook or LinkedIn page right from the console. You don't need to open a new browser to do so. Just scroll along the bottom of the screen and click on the social networking widget of your choice. Also, if you have a question for one of our speakers, please enter it in the Q&A widget on your console. We will get to as many of those questions as we can at the end, so please ask away. And if we don't get to your question, we'll also try to send you an email response. In addition, there are some other customizable functions to be aware of. Every window you currently see on your screen, from the slide window to the Q&A panel, can be either enlarged or collapsed. So if you want to change the look and feel of your console, please go right ahead. Also, there will be some polling questions in this event. We encourage you to participate in these polls. So when you see them pop up, and we'll have a few very early in the event actually, so go ahead and vote, and we will share those results with you right away. So let's get to today's topic and why you are all here today. Ideally, you want to know the right time to reach out to your customer in order to review their needs and discuss how you can meet those needs. So an active risk management program can help you continuously analyze your book for potential risk changes, then get ahead of those changes so you can improve customer service, retention, and ultimately grow more profitably. So today we're going to discuss how an effective risk management program can help you fully understand the risks you are adding to your book when retaining customers. Our speakers today will be Victor Bayes and George Hosfield to share their insights. And so, as I mentioned, we have polling questions. We will actually start today's session with a polling question for the audience. So if we could push that out to the screen. And the first question is, does your company have an active retention program? So please answer whether you have an active program, whether you have a program under consideration, or whether you do not have a program at this time. We'll take just a couple seconds for people to get the responses in. And we should be able to go to the results of that. And we can see that most of the respondents do not have an active retention program at this time. So Victor or George, what do you make of that?
It's actually kind of interesting. What I find most interesting is the few participants that are not currently considering or that the small amount that have one under consideration. It's either a yes, we have one, or no, we're not doing that today. So we'll see after the conversation we have today whether or not those that are in that 8.6% category change their mind, and if that actually, like, let's say out of the 47% moves up into that 86% decides whether or not a active risk management program or an active retention program is appropriate for them.
Okay. I think we have one more poll to present to the audience as well, and this one is, which of the following would you rank as the highest business priority for your company? Is it retention? Is it upsell and cross-sell? Is it loss ratio improvement? Or is it expense reduction? So click the button that best describes your highest business priority. We'll take just a couple seconds for that. And the top priority for our audience is retention. So again, what do either of you make of that?
It's actually pretty interesting. I've done a similar conversation with the auto market and saw a little bit different results, but to see the homeowners market to have such a high interest in retention is interesting to me. It was a little bit higher than I thought it would be. But then tying it in closely with the upsell cross-sell shows, and we'll get into this later in the presentation, that really growth and the desire to maintain existing business is a significant area of focus for our insurance carriers.
Well, very good. Let's push on with our presentation.
Great. So I'm going to go ahead and get started. And where I'd like to start with is the conversation. So George and I have been out talking to insurance carrier customers as part of what we do, And just wanted to kick off with a thought, because one phrase I think we hear very commonly across all of these different conversations is this desire to grow, but then also mitigated by the fact that, well, we want to grow, but we really want to grow profitably. So driving profitable growth within the homeowners market, you as insurance carriers consider a wide range of factors about the property itself, the people in the home, and the location surrounding the property at the time of underwriting when you're adding this policy to your books. And to do so, you're collecting a significant amount of information. A lot of it's coming from the prospective policyholder themselves, but also from a number of other available data sources, such as us here at Lexus Nexus, to really ensure that you fully understand the extent of the risk that you're adding to your book. But we live in a dynamic world, and there's really no expectation that a customer's risk profile will stay the same as time passes. There are a number of life events that might alter the customer's household, which then might require another review by the underwriting team to determine whether or not the risk level is still appropriate to what it was originally measured as, and whether or not, because of that change in risk, a change in premium is necessary. There, of course, is a second desire from knowing about these life events, and that's that if you know about changes going on in the household, they identify opportunities to offer additional coverages or maybe even additional policies based on these changing needs of your customer. So given our changing world, profitable growth really depends on continuously assessing the policy to see if it has become more or less risky, and also to be able to uncover these unrealized opportunities as quickly as possible. Now, this means that underwriting a profitable book of business does not end with the issuance of policy. It requires an ongoing understanding of changes that are going on in the household over the life of that policy so that you can take timely action. And really, you can no longer wait for the policyholder to reach out and talk to you, either from an underwriting standpoint, changes in the household, or from these new opportunities. You really need to look for other information sources that give you information so that you're in a position to reach out to that policyholder so that you can advise them as necessary with their appropriate insurance needs. And when you can recognize that these situations that are changing over time, now you can take action to proactively reach out to them, and you're now in a position to possibly make some midterm adjustments. You can more precisely identify which policies that you want to review prior to the renewal, and you can also provide your agents with relevant information so that they are in a position to reach out, talk to their customers, and strengthen that relationship. Now, traditionally, this type of activity, hold on, we have a technical, here we go. Hold on one second. Okay, here we go. Hold on. Okay, there we go. So, sorry about that. Traditionally, trying to find out about these life events in the household is a difficult process, and it's labor intensive. To identify the changes, you mostly focus rather than on what's the most critical business goal, but what are the events that are easiest to find. But this is what an active risk management program is all about. It is a platform to actively, efficiently, and continuously assess your book of business for changes that will impact your business goals. And then being able to take that knowledge and reach out and proactively talk to your customers rather than waiting for them to come to you. Now, as I mentioned, it's important to consider your business goals when you're kicking off an active risk management program. You really want to understand what is it that you're trying to achieve, because that will help you determine what is it that you're actually wanting to look for in these events that are going on in the household. Now, we've had a number of conversations with our customers over the past year or 18 months or so, and really we've identified 4 common objectives that can be addressed through the active risk management program. And this will look very familiar to the poll that you all just took. The first is retention. Because the insurance market is becoming significantly more competitive each and every year, and this desire for growth continues to get stronger, there is a strong need to identify the value in your existing customer base and hold on to those customers. And it was very interesting in the poll that we just saw at the beginning that for a significant number of you, retention is a very high goal, and being able to identify opportunities when a customer may become risky, that they may attrit, that you can reach out and hold on and try to address whatever issues they may have in order to maintain them as a customer. Continuing the conversation on the growth side, there's a strong desire to continue to get better at identifying the right time to offer new coverages so that your customers are more likely to choose those coverages, and obviously improve the value that each home, each policyholder, let's say, each household has with you as a customer, because that will continue to drive you from a growth perspective. Moving on to the expense reduction side, and this is trying to maintain, again, more on profitability, there's a desire to better allocate resources to those activities that are going to provide a positive benefit for the company. So being able to use more information to understand which policy should I look at, which activity should I undertake, so that you know that every task that you're giving one of your employees to do is driving a positive benefit for the company. And then finally, one of the largest impacts on profitability is the loss experience. So there's always a significant effort to try to reduce your loss ratio. And there's two really actions that are available here through an active risk management program. The first is if you know that a home has become more risky, and you know quickly, you can reach out, you can change it and adjust that premium so that at least you're capturing the revenue necessary to cover the higher propensity that you're going to experience a loss. But there's also, if you know about the change in the household and you can reach out to that the policyholder, the homeowner, talk to them before they experience the loss. Maybe this is a risk that they fully don't understand themselves. They may take action and you may actually avoid the loss altogether. So really, depending on the goal that you have, and whether it be one of your personal goals, something within your department, or maybe it's something that's being focused on across the enterprise, they will lead you to understand the events that are important to understand that are occurring in the household that help you achieve those goals. Now, there are, when you know about these changes, this puts you in a position to better segment your book of business. You will be able to identify based on both value and then business risk. And that risk could take, I've got attrition and risk of loss listed here, but there are other risks could be included as well. But it helps you take that book of business and decide who do you need to be working on most closely and most immediately. Those customers that are of high value to you and are demonstrating a higher level of risk, these are the ones that you want to engage immediately. These may be the quick phone call that you want to make to ensure that whatever situation is arising here doesn't continue to get worse. If your customer is valuable to you, but you see events that are raising the level of risk, but it's kind of lower in severity, maybe it's not that immediate phone call, but something where you're messaging to them more frequently. So if that level of risk were to creep up a little bit more, they would recognize you as a valuable partner or advisor to them, so they're likely to reach out to you and you could address their situation. For lower value customers that represent a high level of risk, this is where you're going to make some different kinds of decisions. You may be okay if they choose to leave altogether because they don't represent enough value. You want to focus your attention otherwise. Or if you recognize that there's some future value there, or the risk is significant from your book, you may choose to take some sort of action. And then finally, because of all of these categories, you know that there's a certain book of business, certain segment of your book that's really in a good position currently. You don't need to reach out, call these folks, touch base with them right now immediately. You want to focus your time on these other quadrants and allow this part of the book to continue to move forward and wait to see or await a life event that may occur in their home, let's say, so that you're in a position to reach out and talk to them when that time occurs. Now, we've talked a lot about this conceptually so far, but I think a good way to go through this next is to have George walk through a personal example in his neighborhood about how both himself, insurers, and the policyholders can benefit from this kind of knowledge.
Okay, thank you, Vic. So now I'll illustrate these concepts that Vic's been talking about using a story. And for our purposes, let's assume that this is a story about the house across the street from my own. We'll say it's loosely based on real events. I live in Alpharetta, Georgia, but it could really be any house anywhere in the United States. The story starts when Bob and Brenda Baldwin move into this house. They're a newly married couple buying their first home. Bob and Brenda don't know much about home ownership, but they're excited to learn about all the new responsibilities that home ownership requires. So, of course, we see them outside painting their mailbox, planting flowers, and doing all the things enthusiastic new homeowners do when they move in. Bob and Brenda, like a lot of new-time homeowners, don't know much about homeowners insurance, but they know they have to get it, and so they get a quote from their auto carrier. They get another quote from an agent recommended by their realtor, and ultimately they buy a fairly standard HO3 policy, which they then pay for through their mortgage escrow, so they don't have to give their insurance situation another thought, at least for a while. So the Baldwin's new house is one of about 5 million existing homes that are sold annually in the United States. These home sales are a key factor in driving consumer shopping for homeowners policies and for auto policies as well. There you go. Okay. So eventually, as often happens, the Baldwins decide to have children. And because they love living across the street from me, even though they need more space, they decide to stay put where they are and make some changes to the house. First, they add on so that each kid can have their own room. And then, because summers do get hot in Georgia, they add a swimming pool in their backyard. So the real question is, do they update their insurance? And no, they don't. I don't know if this is because they simply don't think about it, they don't know that they need to do it, or because they're concerned about seeing their premium go up after they've already shelled out so much money for that new addition in that new swimming pool. But soon they've moved on with their lives and never do go back to talk with their agent. So the Baldwins aren't unique in making changes like this to their home as their lives change. Every year we see building permits for 5 million home renovations. We see another 140,000 permits for new swimming pools. These are changes that are significantly impacting the risk profile of that home, but that are frequently unreported to their insurance companies. So anyway, Brenda Baldwin's a big mover and shaker for an international company, and barely before the concrete is dry on that new pool, her employer offers her a terrific new opportunity to lead a temporary assignment in Germany. It's an opportunity she can't refuse, and the rest of the family is excited for this new experience. Before we know it, they hop on a jet and they head off for Europe. Well, this temporary assignment lasts a little longer than expected, and the house sits vacant for months. Nearly 2% of houses in the United States are vacant at any given time. And as you know, whether it be vanishing contents, getting plundered for copper wiring, or just falling into ill repair, a vacant house significantly increases the likelihood for insurance losses. In this case, the Baldwins and their insurer got lucky, and with the exception of a big thunderstorm that damaged the gutter and blew off one of their shutters, there really was no damage done to the property during the time they were away. Eventually, Brenda's employer asked her to stick around Germany for another year, and tired of paying that monthly mortgage for an empty house, we eventually see a for rent sign pop up in the yard. Soon the renters move in. They were a real doozy. I'm not sure which was worse, all of the traffic from their mysterious home-based business, or their tendency to throw wild parties in the Baldwin's new pool, which, by the way, they didn't invite us to. But it was an interesting experience for us, to say the least. And have the Baldwins updated their insurance agent on all of this? Of course not. In fact, they didn't even realize they would need different coverage for renting out their home. The Baldwins also aren't alone in this regard. Rental units are a growing trend. The U.S. Census estimates that rentals grew 3.3% in 2015, and this is all during a period where owner-occupied residences were flat. How often is this happening on your book without your knowledge? While you wait for the policyholder to call you? Airbnb alone has 2 million properties listed worldwide, and that is just one site. Finally, the Baldwins return, and the renters are gone. We're all very happy to have them back. They made the needed repairs to the house, and things quickly got back to the way they used to be. But it wasn't long before their cute little kids hit their teen years, and then things got interesting in the neighborhood again. Much like on the auto side, teenagers do potentially create new risk in the home. This risk also creates the opportunity to sell new policies or coverage, like, for example, an umbrella policy. And then, at long last, the Baldwin children go off to college. They actually turned out to be okay once they got all that partying out of their system. But with the kids gone, Bob and Brenda are back on their own again and embarking on a new stage of their life. Changes in home occupants actually increased insurance shopping by 22%. And I'm sure Bob and Brenda would have shopped for a new policy on the house, except for the fact that they decided to move instead. The Baldwins didn't need all of that space for just the two of them, so they decided to downsize. As much as they love the neighborhood, they decide to find a new place and set out to sell their house and find one more suitable. The house is on the market for a few months before it goes under contract. Then they quickly find another house, get a couple of insurance quotes, bind, and then at that point, they cancel their old policy. Just like at the beginning of the story, they attach their payments to their escrow and their new mortgage, and they don't think of it again. Now, I'm sure their carrier would have loved to know their plans to move prior to them selling the house. That would have given them the opportunity to be part of the insurance buying decision before they began actively shopping and found a new carrier. So now that the Baldwins are back in their new home and they put their house they put the house in my neighborhood back on the market again, the cycle's all ready to start over again. And Vic's going to talk to you a little bit more about how you can be in a position to be in the know about your policyholders as they go through these types of life changes.
Thanks, George. So let's look at what it would take to build an active risk management program. And if you were to take this on yourself, the desire at first would be, how do I anticipate the needs of my policyholders so that you can identify that these changes that are occurring in their lives? The first step, of course, would be you would need to collect data from various and different sources in order to identify what may be changing over time in the house. How do we know the composition of the home today versus the composition of the home tomorrow? Once you bring that data in, you'll need a team of analysts to go through, look at the data, identify the attributes, and describe those in a way to really realize, are these events important to us from an insurance carrier perspective? Once you've identified these events, of course, now you need to create the mechanism to push this information out to either your underwriters, your agents, your call centers, whoever may be the appropriate group that you want to reach out and call the customers. And then, of course, they'll start making their outreach program, reach out to those customers. And finally, what you'll be looking for is a feedback loop, a mechanism in which to be able to measure, is this program driving the benefits that it was initially intended to do so? Now, initiating a project like this yourself would create a need for a significant upfront investment. And because of that time and investment, you would first have to create the business idea, identify a sponsor, get the business case put together, actually build the solution itself, start utilizing the system and maintaining it over time. All of that creates a large window of time and money that was needed to be delivered up front prior to an opportunity to even begin realizing a single piece of return based on the information that you will intend to collect once the project is completed. But of course, the reason we're coming to talk to you today is because this is exactly the solution that Lexus Nexus has built. We have been collecting the data for a number of years, and you all are well aware of the data collection efforts that we have underway, so that we can really understand the people, the home, the property, the location itself. We've always done that traditionally around the context of really wanting to be able to give the most current and latest view of the location. However, what we've started to do with the active risk management program is to look not only at the current picture, but to see how the current picture differs from the previous picture. Look for the changes and trends over time. And does new information that comes in tell us something different that we didn't know yesterday? And does that change indicate that there is some sort of life event going on? And is that life event relevant from an insurance perspective? We've also built the ability to proactively push that information to you. And we're also, so that you can take action based on the information that you're receiving. We can set it up so you let us know those events that are important, so you only get the events that you're interested in based on your business goals. And we've also built the support tools necessary to identify, are you getting the benefit? Are you getting that retention? Or are you able to get those additional policies in the household based on the actions that you're undertaking, so that you can go back to your leadership and demonstrate that the program is working for you. So we've done the investment. We're now in a position to start providing you some of these insights. And you don't have to go through the effort of building this yourselves and all of the challenges that I just spoke about needing to initiate this program. You really can leverage the interfaces that you've already built into our infrastructure so that you can begin receiving this additional knowledge about your policyholders right away. Now, when we talk specifically within the homeowners market, there are a number of events that have percolated to the top of the priority based on the conversations that we've had that we've heard was important to you, either from a growth perspective or from a profitability perspective. The first one is being able to identify when somebody looks like they may be moving in the very near future. Being able to know when somebody has put their home up for sale, because this is obviously a very significant insurance event. One for you as the insurance company, because you may or may not hold on to that policyholder, but it's also as significant from the policyholder themselves, because buying and selling a home is a pretty strenuous process. So knowing about this event early gives you two opportunities. First, if you reach out to that policyholder ahead of time, you have a significant chance of keeping that policyholder. But if you're providing them relevant advice through the process, they see you as somebody who's helping them, and that builds, of course, customer loyalty as you're achieving excellence in customer satisfaction there. In fact, I remember when I bought a home about 6 years ago, and when I actually bought a home, I remember switching my policy, and it was based on the fact that I was referred to an agent from the mortgage company, and I talked to them, and it turned out that the insurance they were providing was much cheaper, so I just made the decision to move without bothering to go back and do an entire shopping experience. So it is a real risk across a number of areas. Building permits and renovations really is the event. So being able to identify when somebody makes a significant change to their home so that you can realize, is the home that I am insuring still adequately protected? Should additional coverages be added because of that second floor that was put on, or the pool in the backyard? And if that pool was put in, am I checking with my policyholder to make sure that they've thought through putting up the fence and putting the proper protections in place to keep kids or other neighbors out when they're not at home? Things like that, which help you both understand proper protection, but also protect the potential of a loss here. There is a desire, especially in the homeowners market, to make sure that you have the latest contact information for the homeowner. For somebody who buys a homeowner's policy and has it covered under their mortgage as part of escrow, may not have a lot of contact with their homeowner's insurance. And if you see one of these life events and you want to reach out and offer this opportunity to them, knowing that you have the most current phone number and email address in order to reach out to them may help you do a better job of connecting with them and potentially selling those additional coverages. Vacancy was a great example that George just shared in his story. When a house goes vacant, there are any number of situations that can happen to that home. Vacant homes are usually difficult to find. That's why there isn't, from my understanding, isn't a lot of effort to go try to find these homes because they're hard. But if you can take the difficulty out of the equation and be able to identify at least some of those homes that are vacant so that you can just reach out and identify and take action on those, they can have a significant impact on profitability. And finally, household composition changes themselves. Having teenagers in the home, having relatives move in, that changes the liability that is present in the house. So knowing about these changes can help you, again, mitigate the potential for loss and help you drive profitable growth. Now, there's a question we get asked quite often, and that is, this feels kind of big brotherish. We're looking out, or we're identifying these opportunities. Will my policyholder be annoyed by the fact that I'm calling them, or that I'm even aware of that? And there's a few things. We've had a lot of conversations with different groups of people about this, and we found a few things to be true. The first is that customers actually really expect us to understand them better. They want individualized attention. They want the appropriate phone call at the right point of time. And if you know more information that helps you direct better and more individualized service to your customers, and it does it in a way that protects them or avoids some sort of hassle in their life, then you are now in a position to help them, and it's not considered negative. This type of information and this type of concept is being utilized in other industries already, so consumers are starting to get used to it. My credit card company actually recently notified me of somebody was trying to buy a computer at a Walmart up in California, and before that person was able to leave the store with that computer, I was notified via text message and was able to stop that in the process. Now, is it big brotherish that they realize that according to my shopping patterns, I would not be buying a computer at a Walmart in California? Potentially. But it was a very big help for both me and them to identify this because it saved both of us quite a bit of headaches. And finally, there's a desire you want to be thinking when you do this outreach, what is the way to handle the conversation? You're not going to, you want to do so in a very subtle manner. So I'll give you a good example. Let's say you wanted to do a campaign to update the knowledge about who's recently updated the roofs in their homes. You want to make sure that you have the most recent data on the policy. Now, you could send a mailing out to every policyholder asking if they've updated their roof to give you a call or send you a note. Most of those will obviously end up in the trash. In fact, some of the ones that you want to get responses from may end up in the trash because it just looks like a standard letter that went out to everybody. But if you can direct a particular campaign just to those customers that you know have updated their roof, now you're doing something much more targeted, which helps you from an expense and focus side. But also you're reaching out to those policyholders that have had a change. Taking it a little bit further, you don't just want to put in the letter, we recognize that your roof was updated this past year, please give us a call. Again, that ties into that notion of who's watching me. But you could do something much more subtle and get the same reaction by starting with what is already on your records. Mr. Bayes, our records indicate your roof was last replaced in 1987. If this is inaccurate, please give us a call. Now you're using knowledge that you have to direct a very typical conversation and valuable conversation with your consumer, and you're not, again, raising the alarm bell. So if you act thoughtfully about who you reach out to and how you do that outreach, you don't give that impression of knowing too much or the big brother notion there, and it can be quite effective in that matter. So in summary, having an active risk management program gives you a competitive advantage. A continuous analysis of your book of business enables you to recognize changes quickly and then take action proactively. With the new information, as I was just talking about, you're better able to act thoughtfully. You can use the information to have a conversation that is relevant and enriching with your policyholder, rather than, and I get these once a year, the once a year phone call where you get the standard set of questions asked about you in order to really mine you personally for information about you. Much more effective to find this information and have the conversation rather than ask your customer to give you information about themselves. And then finally, by a continuous analysis of your book and acting thoughtfully on the information, you can grow and you can grow profitably. And getting started with a program is relatively easy. We'll work with you to understand which goals, whether it be retention, cross-sell, upsell, or different goals altogether. And from there, we can identify which of the events are most relevant for you, and then come in and share with you the experience that we can see of these types of events on your specific book of business. Not just general market knowledge of what we see, but how do these events look specifically on your book of business. We do recommend after that kicking off a pilot, start receiving these events, flow them out through the appropriate groups in your organization and let them take the action. And from there we can learn what are the best processes to use. And we can share with you our experience, but there may be some unique needs within your organization that help ensure that the information and the action on the information is driving, again, you toward your business goal. And from there, we'll make a decision whether or not we need to tweak some of the processes or some of the information that's being provided. And then when things look good, we can start spreading that out across a wider part of your organization. But if all of that sounds interesting, the best thing to move forward is to reach out to your account representative who can talk to you about Lexus Nexus's approach to implementing an active risk management program. And that is the end of our presentation session. I'd like to go ahead and open the door for any questions that maybe have been asked while we were talking.
Okay, thanks, Victor. Thanks, George. We do have a couple questions that came in. We'll start with this one, Vic, because it relates to what you were just talking about when you were mentioning a lot about the big brother aspect. So how do you manage the quote-unquote creep factor of calling customers with information that they didn't know that you know?
Yeah, very good question. There's two parts of it. The first is, again, not going out and directly stating that you've seen this activity. You wouldn't want to call your customer and say, hey, George, we see you just put in a pool in your backyard. That may come off a little bit creepy. But if you send, again, like my notice and say, have you made any renovations to your home in the past year, please contact your agent to ensure that you're properly covered. Now you're using the information to more subtly reach out to your policyholder in order to do that. In some cases, depending on the type of event, your policyholder may actually appreciate you calling them. It may not have been a purposeful decision not to call, but you certainly want to know that your pool is covered prior to some event happening and finding out that you don't have the appropriate liability in place in order to protect yourself if something terrible were to happen because of, again, like this new pool that's been put into place.
I also say that example that you gave and the approach that you suggest really positions it more as a customer service that you're providing to your policyholder rather than a premium grab. Ultimately, it's the role of the insurance company to make sure that they're properly covered and that they can have that peace of mind that insurance brings them. And providing it from that standpoint helps to manage that conversation in a positive way.
Okay. Somebody else wants to know what type of data is available on home additions and renovations, and what is the source of that data?
Yeah, so I know Vic alluded to this earlier, but we have 10,000 different data sources that we're aggregating at any given time at Lexus Nexus. And certainly when we talk about home renovations and swimming pools and things of that nature, a lot of that is actually derived. There's multiple places that information can appear, anywhere from tax assessor records to building permits. In this case, building permits is really one of the key sources for new changes that are happening on an ongoing real-time basis. And for that, we do work with an outside partner who has nationwide coverage. They're gathering building permits from municipalities across the country. And that allows us to provide information across a number of types of different changes to the home, including renovations like additions, construction, swimming pools, but also electrical renovations, HVAC, plumbing, roof, etc. All of which really I think we feel provides some benefit to carriers depending on the situation to help them really make sure that they're properly understanding what's going on with that policy that they have on their book.
Okay. Sticking with the data theme, somebody wants to know, how will the data or event be delivered?
So there's a couple different ways to answer this question. On a technical side, it's delivered in a typically an XML type package. The idea is that it is a proactive push. So up front, you would identify which events are important to you, and you would also identify the frequency in which you want to receive the information. Do I want to know as soon as we see it? Do I want to see it monthly? Do I want to see it 60 days or 90 days before renewal? And that will all depend on when you think you'd want to take action on the information that you're receiving. It can come back to you in like an XML or another technical format so that you can load that information directly into whether it be your underwriter's workstation or into your agency management system or your CRM type system so that you can see these additional tasks and activities show up, or they can be delivered via like an Excel spreadsheet so that in a case where you may not have the necessary technology in place, the information can be parsed out and handed to the appropriate folks.
So it's good for people to know that there are several different delivery methods that are available. Okay.
Absolutely.
Well, we actually have just one more question in the queue here, and that is, what types of events are available in your solution?
So the ones that we just recently demonstrated on a couple slides prior are those initial events that we're looking at. So it is the ability to identify when somebody is intending to move in the near future, when somebody has submitted a permit and is for a home renovation of, as George mentioned, a number of different types of renovations that they may be conducting, and that can be delivered and decided upon depending on the type of permit, whether or not you want to reach out to the policyholder. Anytime we see a contact change, so information around emails and phone numbers are changing, so that you can maintain current knowledge about that, whether or not the home is vacant, and then also when there's a change to the home composition, more or less people are in the home as we see it due to changes of the teenagers growing up or the grandparents moving in, something along those lines.
Okay. Anything to add on that, George, or does that cover it?
I think Vic did a pretty nice job covering those. I'll just add a couple of things. First being that really those are for what we have identified today for our homeowners market. As we go through time, the way we envision this platform is that it really is a platform that can upon which other data events can be built. And so the intent here is really to leverage data that we have available to provide insights on an ongoing basis as things evolve with the policyholder. The wishes of the insurance community and the problems that you have to solve as we work through these initial events on the platform. We'll be looking for new ones, and we look forward to having a kind of constructive dialogue with the industry on what else they'd like to see.
Okay. Well, that is our last question, so I would like to thank everyone for joining us today. We hope it was valuable to you, and a special thanks again to Victor Bayes and George Hosfield for their time and insights. Also, thank you to Lexus Nexus for their support. If you did miss any part of this presentation, it will be archived shortly, so you can always view it again or refer someone to it. So thanks again.
Ladies and gentlemen, we're about to begin. Michael, please go ahead.
Well, thank you, and hello, everyone. My name is Michael Velker, and welcome to today's webcast, which is titled Active Risk Management, a Smarter Way for Home Insurance Carriers to Retain Customers and Grow More Profitably. Today's event is brought to you by Property Casualty 360 and sponsored by Lexus Nexus. As I mentioned, I will be moderator for this event, but before we get to today's presentation, we'll just go through a few simple housekeeping items. First of all, the event is completely interactive, and it incorporates many of today's social media tools, so you can tweet or directly post information